Hello everyone, I am Pratap here. We are at second practical lesson of lesson 9. In this practical session, let us find the zone patterns in the live charts. Let us draw the zones as per the zone pattern rules. We will also draw the zones as per the distal line placement methods, and we will also calculate risk reward in some of the supply and demand zones. And all these practical lessons are having dependency on supply demand zone price action theory. In case if you did not complete our course, please go to NeoStock YouTube homepage. There you scroll down to the playlist Supply Demand Zone Price Action course. So in this playlist, you can find all the lessons which are part of the phase 1 training program. Please complete all these lessons and then you get into practical lessons. So now let us start the practical session. Let us go to TradingView.com. I wish you all created your TradingView free accounts. So in the home page, let us click on the products and super charts. The moment you click on the super chart, we will get into the charts. Last class we learned how to open different charts from the symbol search. We also learned about watch list. We have also drawn few demand zones and supply zones for the practice point of view. If you want to clear the demand zones and supply zones drawn on the chart, if you want to clear everything, you just right click. There you can find one of the menu item called remove drawings. Just click on this. Whatever you have drawn, everything will be deleted. Now it is a fresh chart. Now let us draw the zones because we already learned. Let us draw. But this time, each time when you draw the zone, let us find the pattern of that particular zone. You have already learned 4 patterns. Rally base rally, drop base rally, drop base drop, rally base drop. These are the 4 types of patterns we have seen. So let us look into those patterns, and each pattern, the distal line placement rules also you have learned. So that is also we will find each time when we draw the zone. Okay, as per our previous session, we identified what is the rule. We always place our mouse at the recent candle. From there you go back and then you can find a zone. So here we are finding a zone. We have a leg-in candle. We have base, 3 base candles, and we have a leg-out candle. So first let us draw the zone. So now I am clicking the shortcut what we placed. In case if you don't have the shortcut, from where you need to open? First, second, third, fourth and fifth. So in this 5th menu, if you click on this arrow mark, almost at the bottom, the first one in the bottom list, that is price range. So we always use price ranges. We have also created a shortcut for this. How to create shortcut? By clicking on the star mark, automatically the shortcut will be created. That is what we are observing here at the top. So let's click the price range. Let us draw the zone first. Now I am not following the distal rule, just drawing the zone. So this is a demand zone. So last class we created the templates. So as per the template, we have to select demand zone. For me, the demand zone, the template name I have given DDZ. Maybe you might have given DZ. I have given DDZ, daily demand zone. Okay, but is it the correct way of drawing the rule? Correct way of drawing the zone? Actually, what is the pattern here? Drop, this is a drop candle. We have base candles and then we have a rally candle. So this demand zone pattern is a drop, base, rally. So what are the distal line methods you have learned for drop, base, rally? So among these 3 types of candles, what is the 3 types of the candles? One is leg-in, Second type is base candles. All the base candles together is one type, base candles. And third one is leg out candle. So when you look into all these three candles, whichever the candle is having the lowest value, that should be the distal line. So that means the zone we have drawn, is it a right or wrong? It is wrong, because the lowest among these three types is leg-in is having the lowest. Leg-in should be considered in drop base rally. So the low of the zone, that is your distal line, should be here. So last class I told, when you manually draw, some gaps will be there. See here, it's not exactly here, there is some gap. So for that I suggested the magnet. If you click on this magnet, now you adjust, automatically the mouse will be placed at the high of this candle. Similarly here you adjust the low. Now this is the perfect way. This is what you learned in the previous practical session. Okay, now as per this zone patterns, this is a drop, we have base and rally. So the lowest of these candles, which candles? All the three type of candles, whichever is the lowest, that should be the distal line. That's why our distal line is, in this example, is at the drop candle, because the drop candle is having the lowest value. That is the place we kept this distal line. For demand zone, the distal line is low of the demand zone, the low of the zone. So this is DBR. DBR means it is a short name for drop base rally, DBR. The pattern is DBR. See, you have to practice all these four patterns. We have only four patterns in supply demand zone price action. So you have to practice them. Let us look into some other zones. So look here, we have a drop candle. We have three base candles. We have a rally candle. So you can draw a zone. Because this is a drop base rally, among all the three, which is having lowest? The base candles are having the lowest. So this is a drop base rally. Previously, in the drop base rally, drop candle is having the lowest value. So that is the distal line. In this drop base rally, the base candle is having the lowest value. That way you should understand. Let us look into some other zones, demand zones. Here also we have a drop base rally. So you can draw a demand zone. The gap between these two demand zones are very small. Do you remember the last lesson we learned, LOTL? You can apply that concept for both these zones together. So these are the few demand zones related to drop base rally pattern. So let us look into, this is a NASDAQ index. Let us look into some other charts. Let us take Bitcoin. Some of us are crazy about the Bitcoin. So we can analyze a Bitcoin. We can draw drop, we have a base candles, we have a rally candle. So which is having lowest? The drop is having the lowest. So that is the distal line. Drop base rally. Now see, immediately you have one more pattern. Rally base, three base candles. Again a rally. This is which pattern? RBR, rally base rally. So among these three base candles, the second one is having the highest. So that is the zone high. And among these three base candles, this is the zone low. Why we are not selecting the leg-in candle? Because the leg-in candle is having the low value. Because in rally base rally candle, we consider only leg out candle and base candles. In drop base rally, we consider all the three candles. Whichever is the lowest, that one is the distal line. That is a drop base rally. This is a drop base rally. We consider leg in, we consider base candles, we consider leg out. In all the three, which one is having the lowest? That is the distal line. But this one is not a drop base rally pattern. This is rally base rally pattern. In rally base rally, we will not consider leg in. We will consider only base candles and leg out candle. So in base candles and leg out candle, base candle is having the lowest value. That's why that is the distal line. We have one more rally base rally. So in rally base rally, you look only base candles and leg out candle. Whichever is having the lowest, that is your distal line. So we have two base candles. So we have drawn the demand zone. We have seen two types of demand zones. One is a drop base rally and another one is a rally base rally. Now let us look into the supply zones. So we have drawn the demand zones in the Bitcoin. If you want to draw the supply zone, that is also you can. So this is currently this is the high. So you have to draw above this current high. So above this current high, are there any supply zones? So above this. See, we have a drop candle. We have 1, 2, 3, 4, 5 base candles. And again, we have a drop candle. So this is DBD, drop, base, drop. In DBD, only the base candles and leg out candle, whichever is having the highest, that is the distal line. For supply zone, highest is the distal line. For demand zone, lowest is the distal line. That is the difference you have to observe. Okay. Now, base candle is having the highest value. That's why this is the distal line and this is the proximal line. And what is this pattern? Drop. We have base and then again drop. So this is a drop, base, drop. Now above this, but what is this zone? This is not a demand zone. This is a supply zone. So what is the color we have to give? Red color. So we already created template. Right click. You have to right click on this zone. Go to the template. Select supply zone SZ. But I have given a name DSZ for supply zone. That is daily supply zone. Anyway, what is daily and what are the other names that we discuss in the second phase of our training program? And look into this, there is one more supply zone here. We have a rally, we have a base, and we have a drop. So what is the rule? In RBD, what is RBD? Rally, base, drop. That is RBD. In RBD pattern, among these three types of candles, whichever is having high value, that should be your distal line. But among these three, base candle is having the highest value, so that is the distal line. So let us click on this zone. I mean, this is a price range. We are using price ranges in TradingView for drawing demand and supply zones. So you have to select the highest value and the lowest value. So this is the supply zone. This candle is having highest values. This candle is having lowest value. So between high and low value, you have to draw this supply zone. So we have seen two patterns for supply zones. One is rally based drop, that is RBD, and another pattern we have seen is drop based drop, that is DBD. RBD and DBD are two patterns for drawing supply zones. So let us look into some other stock. Now let us look into our Indian stock, say Reliance. Let us take Reliance. So here we have identified a supply zone. What is this pattern? We have a rally and then 1, 2, 3, 4, 4 base candles, and then we have a drop candle. What is the rule for RBD, rally based drop? Among these three types, which one? Rally candle type, base candle types, and leg in candle type, base candle, and leg out. So in base candles, leg out, whichever is having the high, that should be the distal line. Now, which one is having the highest value? Previous examples we have seen base candles are having highest value. But now look here, your leg out is having highest value. So the high of the leg out should be your distal line. So from here you need to draw. So let us draw. See here. Now I am placing my mouse, the cross symbol at leg out candle. Now base candle is having the low value. Obviously your distal line is at the base candles only. So this is the supply zone. So recently Reliance is entered into the supply zone. So the supply zone, see how it is not allowing the prices to go up. See how fast it went up. The moment it reached the supply zone, see how prices came down. Now again demand institutions are trying to push the market up. Still the pending orders in the supply zone not allowing the prices. Again pushing down. Again demand is, they are trying to increase demand but still supply is holding. So all institutional pending orders. If the supply zone has to be violated, institutions keep on, they should add demand, demand, demand. Then all the pending orders has to be consumed. Then only this zone will be broken. See, it is a fight between institutions and institutions. Some institutions are trying to buy. Some other institutions are trying to sell. That is what generally happens in stock market. We are just retail traders. Our money is very small compared to the institution's money. Anyway, those concepts we learned in our first lesson and second lesson in our training program. I explained all those points. So what about the demand zone for Reliance? Let us draw the demand zone also. Here we have a here we have a rally candle, a small medium size rally candle. Then we have base candles, 3 base candles. Now again we have a leg out as a rally candle. So let us draw this demand zone. This is a demand zone. So let us change the type. Color should be green color. So in the templates I am selecting demand zone. The name I have given for demand zone is DDZ. See here in this demand zone there are pending orders. somewhere here. There are so many institutional pending orders are there. It went and get into this zone. The pending orders pushed. Again it pushed. Again trying to reach, but maybe the demand is very strong. Again prices pushed. Now after a long gap, again prices entered into this demand zone. Now the pending orders in this demand zone again pushed up to the supply zone. If anybody would have purchased Reliance shares, this is the place to book our profits. Basically, this is the target. So this is the entry, demand zone is the entry and supply zone is the target. But what is the risk reward? Shall we calculate the risk reward? Let us do our calculations. So how many base candles we have? 3 base candles, the high of this zone. So what is the high of this zone? See, if you want to observe the prices, when I place my mouse, look at the top after Reliance. See here. Now I am moving my mouse. Look into the mouse. The cross symbol. Just above the cross symbol or mouse symbol. Are you seeing the prices open, high, low, close, and minus 16.05 is the price change compared to the previous day. And here percentage, how much percentage. But all these values are changing. How they are changing? Whichever the candle currently you are referring, this symbol is referring. Look into the vertical direction. In this vertical direction, which candle is referred? This candle's data is displayed here. Now if I move my mouse, the next candle's data is changed. Now again I am moving mouse. The next candle's data it is displaying. Now similarly, you place your mouse on this first candle in the zone. Now look at those values, open, high, low, close. What is the high of that particular candle value? It is 2232.70. Let me open a calculator. So I am placing my mouse here. So what is the value? The high of this value. Open high. High is 2232.70. 2232.70. So that is the high of this candle. 2232.70. Now where is the low? The third candle is having the low value. So let me keep my mouse there on the third candle in this demand zone. That is having zone low. So what is low value? 2185.70. So minus 2185.70. Let me check. Is it 2185? I am placing my mouse on the third candle in the third base candle in the zone. Now look at the top. Check the value, open, high, low, close. Check the low value, 2185.70, exactly the same. So 2232.70 minus 2185.70, that equals to 47. So 47 is the risk. So the risk is 47 rupees, Indian rupees. So let me save this 47. So I am adding into M plus. M plus means memory. We are adding to the memory. So in the calculator, I saved this 47. Then what is reward? So for reward, you have to calculate from this demand zone to supply zone. Just to give you some clarity, let me draw. So from here, from this supply zone, we are drawing up to this demand zone. So this is going to be our reward. How do you calculate this reward? The low of the supply zone minus the high of the demand zone. The low of the supply zone and the high of the demand zone gives you the reward value. So what is the low of the supply zone? So among these 4 base candles, which base candle is having the lowest value? The second base candle. So what is its value? Check here on the top, these values you have to check. How to check? By keeping the mouse on this candle. Which candle? The second base candle. Now check the values there. The low, what is the low? 2329.15. 2329.85. So let me check. I'm keeping my mouse here. There the low value is 2329. 2329.15. It is not 85, it is 15. So 2329.15. Okay. This is the low of this supply zone minus what is the high of this demand zone? Keep your mouse on the first candle, that is the high of the demand zone. What is the high value? 2232.70. Let me check again. 2232.70. 2232.70. So the low of the supply zone is 2329.15 and the high of this demand zone is 2232.70. We are subtracting both the values. We got 96.45 divided by, what is the value in the memory? So memory recall, 47. So 96.45 divided by 47 equals to 2.05. That means the risk reward is close to 1:2 or 1:2.05, or in simple terms we can say it is 1:2. The risk reward is 1:2. One to two is not a very good risk reward. Minimum 1:3 should be there. Minimum. Or if you are a very experienced person, 1:2.5, 1:2.6, you may consider. If your analysis is very accurate, you can take that risk. But but those who are learning demand and supply zone first time, those who are attending these lessons, you are learning demand zone. For you, 1:5 should be the best option. 1:5 or close to 1:5, maybe 1:4.5 or 1:4.3. Such kind of trades you have to take in the initial stage. Anyway, during the phase 1 training is not the right time for buying and selling. Now you have to only observe. If you really want to buy, don't buy. Do paper trading. Take a paper, there you note down what is where you want to buy. Write there, this is the price I want to buy. What is my target? What is my stop loss? Write it on the paper. And then monitor the trade. Check how much profit you got or how much loss you got. That way you practice until you complete second phase of our training program. This is the time after completing the first phase of your training. You have already attended all the lessons. Now you are practicing. This is the time you can do the trading, but only paper trading. Paper trading means it is a virtual trading, not real. You are writing on the paper and assuming you already bought the share, but you didn't buy. Okay, this is the 1:2. The risk reward is 1:2. Your risk is 47 rupees, Indian rupees, and reward is 96.45. That is what we did, 96.45 divided by 47. So 2.05 is the risk. Sorry, 2.05 is the reward. That means for every one risk, you are getting 2 rewards. You can also you can assume like this, for every 1 rupee you are investing, 2 rupees profit you are expecting. So 1 rupee is your risk. If you get a loss, you lose 1 Indian rupee. But if you get a profit, you get 2 Indian rupees. That is what the meaning of 1:2. Okay, now this risk is, you are feeling this risk is high. So what is that you can do? You can reduce the risk by changing the proximal line placement. You have learned 3 proximal line rules. What is the first rule? What is the first method? The highest wick of the base candles in demand zone. In demand zone. And what is the second rule? The highest body among these 3 candles. Which candle is having the highest body? The first candle in this zone is having, we have 3 base candles in the zone. The first base candle. So let me reduce. Still you feel the risk is very high. So suppose I have changed it to this highest body. Is my trade executed? Yes. Here the price entered, this trade is executed. Even if you keep the highest wick, your trade is executed. If you change the proximal line to highest body, still your trade is executed. But the change is very minor. What is the third one? The lowest body among these 3 candles. Which candle is having the lowest body? The third candle is having the lowest body. See, I am changing now. This is the lowest body. So risk is very minimal here. Your reward also might have been increased. See the gap from here to here, extra reward you might have got. But did you get the entry? Is prices reached here? So many times, at least for every 100 times, at least 70 to 80% times, you will miss the entry. You won't get the price until this area. Just before itself, the price turned up and went up. That means you won't get the trade. So this is the problem you will be facing if you are going for type 3 proximal entry. What is type 3 proximal entry? The lowest body of the base candles. This is for demand zone. Supply zone rules are different. That is what you learned. I think in our third lesson you learned these points. Third or fourth lesson. The first one is highest wick. The second one is highest body. This is highest body. And the third one is lowest body. So this is the third method. So these are the 3 different ways you can reduce the risk. But you have seen in the live chart now. This is a live chart, the Reliance. You missed the entry. If you would have gone for highest wick, you got the entry. If you would have gone for highest body, this is the highest body. Now also you got the entry. But risk is reduced. See here, small risk is reduced. Your reward is also a little extra, you got the reward. Now you do the calculations. It's not me, you have to do the calculations. You have to, now you calculate what is the risk by changing this. What is the value here? That is open of this candle, because this is a bearish candle. The first candle is the open, that is 2226.05. And our distal line still remains same. The low is 2185.70. Similarly, you calculate from here to the target. The target is your supply zone, the proximal line of the supply zone, or you can say zone low of the supply zone, zone low of the supply zone. That is the target. So those who have taken this Reliance trade, they got the profit. Because we already learned demand zone is the area where prices will be moving up. Supply zone is the area where prices will be moving down. So that is what you are observing in the live charts. So we have calculated risk rewards. We have adjusted the proximal lines. to type 1, type 2, type 3. But now you have to practice all these things. Now it is your responsibility. I have clearly explained all these formulas in our training sessions. If you have any doubts, go to the training lesson, maybe lesson 3 or lesson 4. I have explained all these points. If you have any doubts, go through that lesson once again. Then draw in the live charts and then you practice. So what is that we have seen in this video so far? So we already identified all the four patterns in the live charts. We have drawn the zones as per the zone pattern rules. That is our distal line placements as per the 4 type of zone patterns we have seen in the examples. Drawing the zones as per the distal line placements. That is what we have seen. Type 1 distal line, type 2 distal line, type 3 distal line. Drawing the zones as per zone pattern rules. Drawing the zones as per proximal line placement methods. So I have to correct this. This is not distal line placement methods. Drawing the zones as per proximal line placement methods. Sorry for the mistake. Let me correct. Drawing the zones as per the proximal line placement methods. That is what we have seen just now in Reliance chart. And risk reward calculation also we have seen the example. See, highest wick, highest body, lowest body. This is proximal line placements. Then what is distal line placement? That is for DBD, RBD. We have seen. So all those examples are for distal line placement method. Distal line placement is based on zone patterns, 4 type of patterns. Proximal line placement is based on risk reward calculations. If you feel risk is high, you will change to type 2 proximal line entry. This is type 2. See, that's why you have seen a gap between this previously drawn line, the vertical line, and this entry line. Entry line is proximal line. Stop loss line is a distal line. And this is a type 3. See, this is the proximal line. Type 3, we didn't get the entry in this example. And your distal line still remains same. Always the distal line is based on that zone pattern, RBD, DBD, RBR, DBR. Based on these 4 patterns, your distal line will be there. Proximal line will be there based on your risk management. So these points you should remember. I do agree, sometimes you may get confusion about remembering the word proximal line and distal line. But by practice, you will remember. You will not make any mistakes. So I hope some of these examples are useful to you. This is how you please repeat your exercises. If you have any doubts, please mention in the comment section. In the next session, let us look into zone violation, which is a very, very important concept. Our trend calculations are based on the zone violations. And also zone achievement also we will see in the next practical session. Zone achievement. If a zone gets the achievement, that means if a zone achieves its opposing side, that means opposite side. That means if a zone violates its opposite side or opposing side zone, then it gets a zone achievement. That is what you learn. So all such kind of scenarios we will practice in the next lesson. If a particular zone is having achievement or not, we will verify. Similarly, when a zone is violated, the trend is changing or not, we will check. So all these scenarios we will see in the third practical session. So I'm requesting all you people should practice a lot. If you have any doubts, just go through this video, the scenarios we have explained, or refer your theory sessions, your theoretical videos. There I have given almost every example. Still, if you are having any doubts, please mention in the comment section. I will try to clarify if required. In the next video, I will explain the with examples, whatever the question you are asking. So let us all meet again in our next video. Thank you.